Trading News.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
We got some rocking and rolling today. We had our good friend Norm Winsky on yesterday, and he said this was going to be a big day, and so far it certainly is. It's really jumping around everywhere. What we want to do today is take a look at the DAX index like we usually do. We started out with the short-term swings, as you can see. They look just like the S&P pretty much. Now, what I'd like to do is to show you the daily chart, and you'll notice here that if we don't get much above that 12,500 level, that's nothing more than a 382 retracement, which would take the market down a whole lot lower. Now, folks, there was something, that support was broken. I was trying to get to that right away, but I didn't get quite to it. Let's take a quick look at what happened to silver last night, folks. There was something very unusual happening. I don't know if you folks were aware of this or not, but there was a huge break in silver, and I'm going to post up the chart for the July silver. Now, they originally thought that this was an error, but it was on several different contracts. It was on the September and then also on the December. So it wasn't a fat-figured error. They don't tell you, what it was, but they did drop over a buck an ounce in silver. It came right back, of course, but that's what happened. It's really it's troubling to see something like that, especially from a major exchange like the Chicago Mercantile Exchange. But when you're dealing with an electronic market late at night, where there's virtually no liquidity at all, anything can happen. So you got to remember, that liquidity, who's the other side of these trades, is very, very important. You don't want to miss that. That's something that is really, really important. Take a look what it looks like here, folks, on the daily chart. If you want to see something, that is flat out scary. It went all the way down. The actual low here on the e-signal setup is wrong. It's showing as 1435. The actual low was 1465, and I checked that with my good friend Never Miss a Tick 20man, and that was the low in spot silver. So you can see that big hammer, but whether that means anything, that was a 1.618 expansion if it were the right price, but it wasn't the right price. So the only thing you can do is to stand aside for a day or two till it, the smoke clears and you see what's going on, because it's very unusual. First of all, remember that silver is about 1/6 the volatility. Well, not volatility, 1/6 of the volume and open interest that we have in the gold market. So you want to pay very, very close attention to that. Now, we're going to have a little test today because it's Friday. Thank God it's Friday. I always don't like Fridays. I like it, thank God it's Sunday, so the trading starts. But if we'll take a look here, we're going to put up a mystery chart, boys and girls. This is a Friday's mystery chart. I didn't tell you what it is, but if you can guess what it is, I took the prices off. Well, anyway, if you can guess what this is, let me know, because you'll get a big prize. You'll be invited to Tucson, Arizona for my 100th birthday party. All expenses paid. So the first one that gets it, yes, it's a 3-drive pattern. It's not a butterfly. I want you to tell me what it is, though. That's what I want to tell you. I'll give you a hint. Charlton Heston, 1958. Soylent Green. It's soybeans, folks. This is just a 5-minute chart on November beans showing you that the 103 level may or may not have some resistance. So, okay, Tammy, you're booked. We'll put you up at the hotel here when I have my 100th birthday. We'll have you up here for that. Anyway, that was a very, very, really very interesting movie. Back in the old days. Well, I would, I'd keep your fingers really tightly crossed, Tammy. I would certainly do that. Okay. Yes, I know the Soylent Green. They said it was soybeans, but in fact it was recycled people that they were dealing with, and Charlton Heston was the star of that. In fact, that movie had a lot of really bad press because it scared me. I was a kid too. Well, I was a little older than a kid, but I didn't like it either. But it had a lot of bad press because of the soybean industry, which is just beginning to boom at this time. Let's take a quick look here, folks, at something that has been jumping around quite a bit, and this is the crude oil chart over the last on a 4-hour chart over the last 6 weeks. As you can see, we had that big rally up to the 47.30. We broke $3 a barrel. The overnight low that we made tonight at 44.04 was spot on, 61% retracement of the low that we made back on in the middle of June, around the 20th of June. So if crude oil's any good, it's not going to get below the $44 a barrel level. It's already rallied 80 cents a barrel from that level, but it hit it spot on. And believe me, when you're doing these, I wanted to spend a little bit of time here about trade preparation, folks, because when you've got a day like this, where you've got a jobs report, plus all this Astro stuff that Norm talked about yesterday, you have to select what you want to trade, whether it's Treasury bonds or the NASDAQ. You've got to pick 3 or 4 markets and follow those real closely. That's the only way that you can really do this, in my opinion, because you just can't follow everything because it's jumping around quite a bit. That was one of the problems, as a floor trader, had to find out which pit you wanted to be in. And you had to be in a pit that was, belly to brisket of traders in there. So there was a lot of liquidity. But now that we have this electronic trading, we have to pick it ourselves. And so your trade selection has to be done the night before. And that's pretty much what we're looking at. Today, what I'm watching I'm watching Treasury bonds because I believe they're very, very oversold. I was in them overnight for a little bit, but I got out even because of the report, which I was glad that I did. And then I'm also looking at the possibility of 51.20. My level that I'm looking at is 51.15, and they got to 51.18, but 51.15 is what I'm looking at. So whether they get there or not, we'll have to wait and see. But it's pretty much spot on, something that we really want to be watching it very closely. We're showing 51.19 last, and then we'll see what's going to be going on from that level. Okay, the other one is gold is now broken down below any support, folks. We had $11 rally after the jobs number, and of course that's nothing in the gold market. But we're now breaking. Let's just get this up here to take a quick look at it. The mystery chart was a 5-minute chart on November soybeans, just showing you the 3-drive pattern. That's all. Let's take a look at gold here, and you'll see that this thing is just it's cracking like a rock. It's we're heading down to the I put up Treasury notes. All right, give me a break here. I'll get it up here in a second, and we'll have this gold market up here, God willing.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before. So now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I've put the chart up for the euro, and as you can see, we've had some pretty stiff resistance there at that 114.40 level. We've hit that thing 3 times over the last several months, and so far it's backed off about 60, 70 pips since after the report. And being the fact that it was a really strong day for the markets, you wanted to be able to expect maybe something like a reversal could possibly happen, but that's neither here nor there because sometimes they work, sometimes they don't. Now, I've been asked to take a look at the little piggies, the live hogs. We were talking about those just a few days ago. We had a really nice pattern in the hogs. I don't trade these very often, but this particular situation really had a nice spot where you had a 1.618 expansion. You had a really nice doji day, and then the next day, the hogs really broke badly. Now, how much they're going to come down, we'll have to wait and see, but at least it started in the right direction. As far as the wheat's concerned, I probably have to do that at the break would be my guess because of the fact that I don't have the chart ready for it. But we were able to get that. We were able to look at the euro. And the gold is just flat out breaking down, folks. Just a second here, if I can find that chart, and we'll see if it's going to be okay. I was just about to talk in gold. Okay, someone's asking me about this gold again. Let's do this since we've got a sec. I've got a gold right here. Let's put it right up. There we go. Here we are. We're going to get it back up here. This is where we were as of Friday. This is a week that we were looking for the price to come down to 12.16, and we did. After we hit 12.16, we rallied $13. We got to 12.20, 12.29, and now we've come down, and we're getting ready to take out the lows of May. That's not a good sign, folks. Now, maybe that's all it's going to do is to take it out. But if you're going to trade gold, you've got a really good shot here. On Sunday, you've got the full moon coming up. So I would wait, give yourself a little bit more room. Trading during the time of a report with gold is, I couldn't recommend that for anybody. But I would, if you're going to buy gold, wait till Monday. Let it take out those stops down there in May. Now look what happened to silver. Maybe that'll happen to gold too. I don't know, but that was a real aberration in silver, folks. If you'd have had a stop in, you would have probably got a bad fill, but you wouldn't have been filled anywhere near the low. That was all selling down there, and somebody was buying it, and you can see what happened. How it reversed. Yes, Shane was talking about the possibility of gold coming in here on July the 7th, but because of the full moon, I would wait until Monday, because I would like to see if it's going to test these stops down at the in the May level. Now, if it just gets a little bit below the 12-13 area and doesn't go anywhere, that's telling you there was no stops there, and that's very, very important information. The second thing that we have to check is we have to check what the open interest is going to do, and so that's why it's better to wait until Monday on the gold. It's this business is not about making money; it's about losing as little as possible. So it's best to wait, and that's why I think the prudent person would probably getting ready, to do that. So we'll see. Yes, the full moon comes in on July the 9th, early in the morning. So that would be, by the time the gold opens up in the afternoon, the effects of the moon will certainly be, would be felt. So if there's more selling to the downside, see, remember it has a one-day orb. It could be one day on either side of this. All righty, so let's just wait on the gold. There's no reason to really do that. But let's take a look here at the Japanese yen, which this is over the last 6 or 7 trading days. This is one that was on my watch list for today, and we just hit the price just a few minutes ago up here at the 113.90 and change, and that's a 3-drive pattern also. Much like what we had in the soybeans. And here again, it might not work, but it is a pattern, and it is one of the things that I'm watching very, very closely here to see if it's going to hold up. But I just repeat over and over again that the real key to this is not how much money you make, it's how much money you don't lose. So you do trade selection, use your money management to the best of your ability, and that's really what you really want to be doing, because it's a very important concept. Now, I had one other question, and that is about the crude oil. Let me get this up here so you can take a look. Hold on a second. We've got a question coming in from the old, let's just see where we are here. Oh, we got a caller from, where is, that must be New Jersey. Victor, are you there?
Yeah, I'm here. Yep.
What can I do for, is that New Jersey?
Yeah, that's where they shut the government down over the weekend. Nice guys, right?
Oh, for the beach. Well, the governor didn't want to have everybody up on the beach.
Yeah, he wanted the beach to himself, right? He's a little narcissistic. But hey, what did you say? I noticed gold. If you do the Fibonacci retracement and expansions, those triangles, it does like every 30 days, and it seems like we're going back to election. When the election was, when it popped up. You know what I mean? In November.
Yes.
We're hitting around there.
Yes, you're absolutely correct. And that 30 days is nothing. Date? Pardon me? That was November 8th, but what were you asking?
Is that an important date? It seems like we're hitting right around there, and you have all this stuff going on, this chaos in the White House, and it seems like, seems like stocks do the same thing, go back to November 8th.
There's certainly a possibility that they could do that. The one thing that you want to keep in mind is that the key to this gold market, to me, Victor, is this the May lows that we had down here at 12.13. If we take those out with gusto, in other words, we go about $5 to $10 below that, that tells you that the market is headed down, and the next area to look at it would be around the 1190 level. So right now.
Yeah, no, Coach, I use stock charts. I go to retracements and all. You do the weekly and the daily. They look like they're all butterflies or whatever you call them. Gartleys, they're like 1.1 extensions. They're like 1-to-1s, and they're all like leveling out. And 1190 is a good number to me because that's 911 backwards. So,
that is, I never thought of it that way, but that is a good one.
Oh, you don't know what these trading gods do, man. Everything's symbolic.
Yeah, I agree with that. By the way, Victor, I don't know, since we're talking about symbolism and people are listening to us, there is an absolute fabulous program on Netflix called The Pyramid Code. And anybody that has an interest in astrology or harmonics or anything like that should really watch it. There's 4 segments. It's about, each one of them is about 40 minutes. They are fantastic. I mean, they really explain the astrology and, it's really, it's called The Pyramid Code.
Yeah. I go to website eno.com, and I had fake prints of 3 times, 11:30 last year, and that's where we hit finally. I even talked to the main guy about that. And I think the fake print on silver, you're going to hit 1460. It was put there for a reason.
Yeah, that's probably it. You could get there very easily, that's for sure. These markets are certainly wild. There's no question about that. Hey, listen, I want to thank. Go ahead. I want to. Well, if you want to, give me a call on Monday, and we'll see what the gold is doing. But I wouldn't do anything until we see what happens Monday. So far, our low's been 12.1370 in the gold today. But we're not even been trading a couple hours, so we got the whole day to go.
Maybe Putin will hammer everything out. All right, take it easy.
Hey, thanks for calling, Victor. Yeah.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and when I show you these patterns in here, it's your responsibility to put your stops in and stuff. I'm just giving you some ideas, showing you the technical analysis works, but it doesn't work all the time. Just remember that there's many times that it doesn't work, and that's the ones that you have to, protect yourself. The ones that work, those are really easy. It's the ones that don't work that are problems. You'll notice here the euro that I put up here showing you the different swings that we've had here. This is the one that we had through Friday, and of course we had one this week where we came down almost the exact same amount. We went up and touched the high again one more time. The reason why there's so much resistance up there is because of the long-term, weekly charts have a lot of resistance in that 1440 level in it. So we'll be able to see what's going to happen. So that's the main thing, to keep in mind that these things are, they can be very, very volatile, of course. And we'll see just a perfect example, the soybeans that we were looking at, it went through the number we were looking at, which was at the 1103 level. So, that tells you that it's probably getting ready to go higher, which in fact it already is. But those are just some of the things that you got to keep in mind. It's not the amount of money that you make, it's the amount of money that you don't lose. So just keep in mind it's very, very important to follow that principle. That's the main thing that you want to be watching. Okay, now the another question that someone asked is about the gold. Folks, I can't be any more clear in the gold than what I'm saying right now. We've got down to 1213.50. That doesn't take out the low from last May. The low in last May was at wow, maybe it did. Well, let me see. No, that was at 1212 and change, so it hasn't taken that out yet. 1224. No, it hasn't taken that out yet by a long stretch of the imagination. But the May low, it's already taken that out. That low is at 1214.30, and we've already gone below that 1213. Now I don't know if that's going to be a major bottom or not, but even if it is, I wouldn't touch it until we were looking at the spot of what's going to happen at the with the full moon coming in on Sunday night, and that's when I'd be looking to be interested. Because now, if all the stops have been taking out here, then it's got a pretty good chance. Because you don't want to get caught in one of those downdrafts like we just had in silver last night. Those are not very much fun, boys and girls. This much I can promise you, without any trepidation, that they're really not very much fun. Let's just put this gold chart up here so we can take a quick look at it together. This is the daily chart, and we'll get it up here so we can take a quick look at it here. Just give me 1 second, and we'll get it. Hold on 1 second. Hopefully, there we go. I think this is it. Yeah, there's the gold chart, and we'll take a look at it here. And you'll see that we've got down below that low in May. We didn't collapse from that. That's a good sign, but we haven't gone up yet either. So we have gone below it. We're now down $85 from our high that we made, way back in June. Now, the last time we had a high like this back in April, we dropped $80. Now we dropped $85. So there's a lot of work to be done on the gold over the weekend, just for the fact that it's down in this area. It's extremely oversold, and nobody likes it. And so there is a spot here. And if you notice the cycle that's there, that cycle could easily be a day or two off, and that would take us into Sunday. So that's the main thing that I would be watching as far as looking at something like that. That's what I would think it would be, very, 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 very important to watch at. And frankly, I have no interest in the silver. Gold is so much easier to trade, and it's just just a whole lot of things to make. Yeah, the crude oil on that last rally, it stopped exactly at the 61% retracement of that overnight high at 44.75. So there's another spot where if you're following, but you can't follow all of them, folks. That's the problem. There's so darn many of them that there's just no way that you can follow them all. There's just nothing you can do to say that that's that's what's really happening. So pay attention to that. It's a very important concept, to be watching. So that's what we're looking at here today. Okay, now we've got let me see, we've got stocks are still rallying pretty good, which is a good sign for everybody. And let's just move this gold around here so that we can get these other charts out that people have asked to see here. I've got a request here to take a look at the Dow Jones Transports, because we've made new highs in the Dow Jones Transport. That is in fact a bullish sign in itself. And as you can see here, we've had a pretty good run here. We did take out the highs in February by just a little bit, by just a few percent, and whether we take it out again or not, we'll have to wait and see. Folks, this is my 2 cents worth, folks. Let me just get this up here and show you. This is what I think is what we have happening right now. This is the Bradley stock market model, inverted style. And the reason why I think it's inverted, as you can see, during June into where we are now, we've been pretty much up, and we're only a couple of days off the high. So I think that the high is going to come in here Sunday or Monday, and then we're going to see this move down. And if it's correct, the number of days between June 19th and August the 14th is a total number of 55 trading days. And if you take a look at history, and let's just get this up here so you can take a look at it. This is going back to 1929 and 1987. You'll be able to see, if you take both of these together, the only thing that they had in common was the fact that you had exactly 55 days from September 3rd to October 29th, 1929. That was the crash. And in 1987, from August the 25th to October the 19th, you had 54 trading days. So it was one day off. So that would take us into August 14th. And as you know from our good friend Bill Meridian, who was on with us on Wednesday, August 14th is one master day. I mean, we got that solar eclipse. There's so many things happening, and that's it. So what is the Bradley address and cell number? I don't know what you mean by that. Oh, no, he's over there in the he's up in the cemetery section over there up in Queens. So he's been gone a long time. So you have to blame me. And what I do is I'll pick out somebody else, and I don't like to, to take, well, I take responsibility, of course, but, all I try to do is to get, just like everybody does, you just try to give you things that you think will work, and sometimes they do, sometimes they don't, but those are the things that you want to, really keep an eye on of what's really happening in the market. So that's my 2 cents worth, folks. So we'll just see how that ends up, but that's what we're looking at. I hope that helps, and we'll just go on to the next one here and see what's going on here with the rest of this. Okay, we've got the gold situation taken care of. Right now we're trading at 1215.50. The close will be really important today, because if we break down and close below that 1213 area, that's going to tell us that we're definitely headed lower. All we have to do is to look at the next support, which we mentioned comes in at around 1190 per ounce. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, let's do a little bit of work ourselves here. And yes, Tesla's down over 20%, I guess, from its high. Frankly, I could never buy a car that you can't hear. I don't know what they're going to do if they're going to go to electric cars. By then, I hope they'll be the self-driving kind. Anyway, let's take a look at the gold market, folks. I just want to look at this on a little bit longer-term time frame. Now, if you'll notice here, we were talking about this 1190 area. If you'll notice on the long-term weekly charts, this is going to be a 61% retracement. If you'll notice the high that we made up there at the 1293, that was the 61% retracement of the high that we made back at 1377. So this should be some pretty good support. The problem that we have here is if you look at this weekly chart, you'll see these really wide moving bars to the downside. Those they're falling very, very quickly. So I don't think I'm going to put my order in there. I'm going to wait to see if it's going to hold and maybe buy the first retracement after a rally. But right now, I certainly can't touch the gold, especially today and maybe not even Sunday. So that's the main thing to take a look at this. Someone's asked me to take a look at price line. I'm almost afraid where it's trading. The last time I looked at it, it was around 1600. Let's see if I can do this quickly here. And just give me a second here. Give me what here, the price line. We haven't heard from Priceline Charlie, so I guess it's not been either that or he's bought Mexico. He could have done that possibly because of this. We'll see. Wow, $1,800. And is that the high? Well, no, that's no, that hasn't even been the high. The high was 1,900. I don't see. Well, the actually this is a sell signal in Priceline, boys and girls, if there is such a thing. Let's just quickly look here and get this chart up here to take a look at it, because it's that pattern that we really like, which is the 135 pattern. Let's just get this up. And this is a stock you don't want to mess with unless you do an option. First of all, you probably can't even get it on the short side. You probably can't even buy the can't even get it shorted because they can't borrow the stock. But it's got a really nice pattern. And here, let's just put this up here and take a look at it. Yeah, well, I miss old Charlie. He was always a lot of fun to talk about. No, Charlie, he wasn't into that kind of stuff, Danny. Okay, let's take a look here. This is the 135 pattern. We'll do this just for educational purposes. But the 1 is at the high in May. The 3 is where the 73% retracement came in, and then the other one is the high that we had back on the 28th of March. Now, of June. As long as we don't get above 18.99. This is certainly, and it's already broken. It went all the way down. It broke $60 after the signal. So I don't know whether I'd do that, but I wouldn't touch this stock for, neither here nor there. It's just not worth it. The one thing to keep in mind over anything else that we're doing here today is that interest rates are going to go higher, regardless of whether we get a rally in bonds today or not. It's not going to make a whole lot of difference. But if you will keep in mind that these rates have already tipped their hand. Long term, they certainly look like they want to move, to the downs. Rates are going to go higher. In other words, bonds and notes, are going to go lower. That's the main thing we're watching. There was some support in the bonds at that 12. Let's put this up here and take a look at it, because this is what I was watching for today at the 112 level, 152 level. Let's just get this up here. And because we did break below this key level today, we broke below the 78% level by quite a bit. We got down to 112.18. We're now trading at about 151. That was 151.18, and we're now trading at 151.28 or 29, something like that. But this was an equal move that we had between April and May. It's very similar to what we have going now, except the steepness of this move is greater, and that means, and the thing that's most bearish about these bonds, folks, and let's just take a quick look. Oh, do I still have? Yeah, I do. I still have it. Hold on here. Here's why the bonds look so weak. And this is as they were Friday. Hold on, just get this up here, take a look at it. This is why they're so weak. We didn't quite make a 38% rally last week. This is a weekly chart. Now, you'll notice it says 0.36. It's very close. You can see the ABCD pattern that measures up into that area. And now we've gotten below 152. This is not a good sign if you want to be long bonds, folks. This tells you that rates certainly want to go higher. And look how many weeks it took to do that. It took several months to make a 38% retracement. That's another sign that this market is extremely weak. Look at the high that we made, back in June of last year. That was a big butterfly top. I mean, it was a lot of things happening up there at that 1.618, which is the 177 level. And now we're trading at roughly 152, and that's not a good sign either. So we'll want to watch that. That's a major one to keep an eye on for sure. So this is what I'm saying. Rates are going higher. We had a tip off to that, and we've been saying that for well over 2 weeks in here, because this is one of the ones that we talked about when bonds got up to that 157 level, that false breakout. You can see that the Treasury notes were lagging so badly, and now they've caught up. But the notes are much bigger. They're 5 times the volume and open interest that you have in the bonds, and that's what makes the difference to look at it. Another thing that we need to do is we really need to watch what happens with the gold open interest. Now, if the gold open interest drops dramatically on Friday, today, and we can have that information, by Sunday, that's going to be a really important thing, because that's a bullish sign if it does that. Now, if open interest increases in gold, that means new shorts are coming into the market, and they got lots of bucks. So because the market's on their side, so that's why we have to wait until Sunday at the very latest. And believe me, they're going to have to put crazy glue on my fingers to keep me from pressing a button, because I am not going to buy gold unless I find some really, really low risk entry technique where I don't have to risk any more than whatever it was, just $5 at the absolute very most. But anyway, yeah, that was the only time, P. Once a year I get that award once a year. So we'll see what's going on here. Okay, let's just move on here and get some of these other things out of the way. So we're going to wait on the gold market. I think you'll have more chance to look at it. Silver's not acting that good either. So another reason is telling us that we're looking at something that is certainly telling us that we're doing something that is probably probably not correct. Anyway, we're going to be watching here for just a minute here and see what's going on, and then we will move on to the next one, and we'll see what we're doing here. Okay, the stocks are still up pretty good. Bonds are still down, but not as much as they were. They rallied back about 12 pips. The euro's not doing much. The yen made that 3-drive pattern and it backed off. The one in the soybeans, we were looking at that to come in around 10.03, and we've already gone 6 cents above that, so that one certainly didn't work, and it looks like that we're getting to go higher yet. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to finish up the show here by telling us that we really believe that we are going to see higher interest rates down the road. And the other thing is I will be doing Tom O'Brien's show at 3 o'clock this afternoon while Tom's on vacation, and we'll review some of these markets and some of the things that we might be looking for, coming in to the weekend. So those are the main things that we want to keep an eye on as we go through some of these. But we're having an up day after being down quite a bit. We were down 100 and some, 50 in the Dow yesterday. We're coming back quite strong on that, and it looks like we're going to close pretty pretty strong on the on the stock market. It's a little bit early because we've only been trading for really about a half an hour. So this is amateur hour. So want to watch that closely for sure. As far as support and resistance, the 2427 level is still a very strong area of resistance in the S&P. The NASDAQ, the E-mini NASDAQ, there's resistance there at the 5655 level. If you're watching that, so that's another one, to keep in mind as you're looking at some of these things as we go through the rest of the day. But it's still rather early, and we should have some more ideas on some of these things as we get closer through the day. That's the main thing that we want to be keeping an eye on. Okay, now the one thing that I wanted to mention, I did mention about the show with Tom O'Brien. The other thing is I'm going to have a couple of new guests, I believe, next week. They're going to be surprise guests. Trying to get Mark Leibowitz of Volume Reversal, who's extremely good at what he does, and that'll be fun to talk to him. And then we're also going to try to have Bob Miner from the Dynamic Trader out of Denver, Colorado, or Medellin, Colombia, wherever he is at that particular time. But we'll try to have both of those folks on as a guest. And then also Kyle Cooper, who is the energy expert out of Houston that we've had on several times, who's pretty good. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.